Welcome back to Real Estate Live, where your questions get answered. We get to the point with the hot topics everyone is talking about twice a week. That is a change. We were going live 3 times a week. Now we're going live twice a week at 9 a.m. Pacific time on Monday and Friday on YouTube and Facebook. Today's hot topic is all about the different types of forbearance, and specifically, has forbearance gone wild? I'm your host, Andrew Finney with King Realty Group in beautiful Las Vegas, Nevada. After today's hot topic, Celeste Harvey is going to share with us what's going on with the different types of forbearance. Is forbearance going wild? And answering your questions in the viewer Q&A session. Let's go ahead and bring Celeste up. Good morning, Miss Celeste.
Hey, Andrew, I can't hear you.
You have it muted. So, on any given live stream day, we have a lot of fun. And today we were in the live stream studio and everything worked well. And then for some reason, it didn't. So that's kind of interesting. So bear with us with a little bit of technical difficulty. And we will make this happen. I do apologize in advance, and things happen. So Celeste, we can hear you. So please let us get back to it if we can. Can you hear me? This is like a real, cable, and this is awful. So sorry about this, everyone. All right. So part of what Celeste wanted to talk about, and I will start just joining it in, and if we can, and maybe Celeste can get back into it somewhere, and then we can figure this out together here. But all the same, she was mentioning in the notes that she sent to me is that Bill and I had gone live approximately a month ago on April 15th about mortgage forbearance. And we were talking about how mortgage forbearance worked at the time. It was something that a lot of people were starting to ask about because that's what we heard getting ready to be pushed out from the government, or forbearance options. So with the forbearance options, it was really important to understand exactly how it was going to work. And unfortunately, there wasn't a lot of guidance just yet. So that's where Bill and I wanted to start providing some of that guidance. Who's going to qualify for forbearance, how forbearance is going to work, and leading in with what is forbearance itself. So going back to what is forbearance, I have the definition of forbearance for you, and let me go ahead and pop that up. And when you're talking about forbearance, there are different types, but most commonly that's coming up right now is forbearance, mortgage forbearance. And mortgage forbearance, as defined by Investopedia, is forbearance is a temporary postponement of mortgage payments. It is a form of a repayment relief granted by a lender or creditor in lieu of forcing property into foreclosures. Now, this is really interesting because keep in mind, nobody's going to give you a freebie, and nobody's going to make it easy exactly to say, hey, this is what we're going to do. Every service provider that we've been coming into contact with is approaching this a little bit different. Some people are saying that they may have forbearance that is going to be repaid in a lump sum, but that's just not the case of what's realistically happening. What is realistically supposed to happen is for government-backed loans, like an FHA loan, a VA home loan, or a USDA loan, then you're supposed to be able to establish a loan repayment plan so that you can comfortably be able to repay it, whether it's going to be through increased mortgage payments or a loan repayment structured plan. Now, bear with me real quick. Celeste, I hear you just fine. Can you hear me now?
I can hear you finally. Sorry, Andrew. I don't know what happened there, but I guess that's what happens when you go live.
It is what happens when we go live. So I was sharing with everybody while you were figuring that out, and thank you for reconnecting and joining us, that you had mentioned that Bill and I went live on April 15th, which was approximately a month ago. And then I started going into the different things about forbearance, and some of the reasons that Bill and I went live at that time is a lot of people were talking about it. Nobody knew what was going on with it. And we wanted to let everyone know, hey, if you need a forbearance option, it's going to be there, but we don't know how it's going to work yet. And then I started going into some of the updates that we were talking about with different creditors saying, hey, forbearance is going to be due all at once at the end of the day, when that's realistically not supposed to be the case. And it's causing a lot of misinformation and a lot of fear. Now that you're back with us, why don't we go ahead and jump into that conversation right after you give us a quick mortgage rate update.
Ooh, okay, yeah, let's head into the mortgage rate updates. So rates have been pretty steady this week. You know, I've been following the Fed and what they've been doing with pumping money into mortgage-backed securities, and they're starting to take the training wheels off. And what that means is, you know, back in late March, they were pumping about $40 billion into mortgage-backed securities per day. Now, this week, they're pumping about $4 billion to $5 billion in mortgage-backed securities per day. So we're seeing those training wheels come off. We're seeing the Fed do a great job at keeping the mortgage market steady, which is great for interest rates. Interest rates are at historic lows. And I would say, you know, this week, interest rates have been in the low threes for most loan programs that are 30-year fixed programs.
So you have mortgage rate updates then essentially being in the low 3 points right now. So like 3 1/8, in other words, 3.125, 3.25. Is that what you're, okay, cool.
Yep, just depending on the loan program, just depending on your credit score, but you should expect to see interest rates in the low to mid threes.
Okay, fantastic. So thank you for that rate update. So now let's get into the different types of forbearance, because that was one thing that I was sharing while we were working through the audio difficulty there of you not being able to hear me, but we all could hear you just fine. But that's
That's embarrassing. I need a margarita
okay.
now.
A Margarita Friday. It is Friday,
Yeah.
and we have you with a Margarita Friday. That's your mantra. So
Awesome.
with that said, a lot of us think of forbearance and being synonymous with like mortgage forbearance, but we've also come to learn there are different types of forbearance, including auto loans, credit cards, and student loan forbearance. So could you identify and touch on those different types of forbearance options, please?
So yeah, we're starting to see a lot of consumer creditors offer these different types of forbearance programs. So as a mortgage lender, you know, when we pull your credit, we can see if any of these debts are in a forbearance program. And we're also starting to see that maybe having these debts in a forbearance program could impact your ability to qualify for a mortgage loan. Now, the guidance is just emerging on this. It's still developing, but we are starting to see some lenders put up roadblocks for people who've maybe put their auto loan into a forbearance program. So it's interesting to see how that will play out over the next few months.
Okay, so you are saying that if somebody has, let's say, a credit card forbearance or an auto forbearance, that it could impact the way that they buy a home if they're in forbearance?
Exactly. Yeah. So we don't exactly know how that's going to impact people because, like I said, it's something new that we're starting to see more frequently. So, you know, if you've put your auto loan into forbearance and you're thinking about purchasing a home or you're thinking about refinancing your home loan, I would definitely think twice before putting that debt into a forbearance or deferral program. And, you know, now, I really, really want to stress this. Right now is the time that you should be keeping your credit clean if you are thinking about purchasing or refinancing in the near future. You definitely don't want to be putting a lot of these items into forbearance right now because we really don't know what the impact of that is going to be. We don't know what the guidelines are going to state, you know, a month or 2 months from now.
Okay, so that's really interesting. So it's still evolving, even though we are now 1 month from the first time that Bill and I touched on this, and more information is coming out, which is helpful. But to the point, you know, when we start talking about mortgage forbearance in specific, Celeste, because you are a loan officer, a home loan officer at that, right? So let's get on to like direct mortgages. It's one of those situations, you know, it's easy to say in a way, hey, you know, keep your credit score clean, pay your bills. But what do you tell somebody that is furloughed? How do you tell somebody that's furloughed that just got a letter, like MGM put out a letter to a lot of different people? And in fact, unfortunately, a really wonderful client I was working with, escrow got busted because it got a letter that essentially MGM said very politely, hey, we're going to be bringing people back, but in your case, it'll probably be towards the end of the year or early next year. So now you've gone from a furloughed position when they thought they were going to be back coming up in the next 15 to 30 days to a situation now where they don't exactly know when they're going to go back, but it could be as long as 6 months out. Obviously, the seller in that case wasn't willing to wait that long. and the deal died. And so did my heart for the person I was working with, because he was very excited to purchase his first home, and it was heart crushing to see that happen. So it's easy to say, in a way, if you have job security and you have a lot of things and you're able to pay your bills, it's easy to say, keep your credit clean. Don't use these programs if you don't need it. But what happens, Celeste, if somebody truly does need it?
If someone truly does need, to place any debt into forbearance, the government has made it really easy for those people to take advantage of these programs and get the help that they need. So I know, if you're applying for a forbearance program, for your mortgage, it's as easy as just going online and opting into the program online, or you can call your servicer. It might take a while to get a hold of them because they're receiving so many calls and they're just really bogged down by all these calls. But eventually you will get through to someone, and they're more than happy to help you out. And they're not asking any questions. There's no requirements necessary. They're just saying, hey, you want to opt into this? Okay, perfect. We're going to put you into this program right away.
So that's an interesting comment. So again, that's for the people that truly do need it. Now, if best practice here is probably the same, and I know that you and I have been talking about this, obviously not in a live stream format, but let's talk about it now. Where if somebody can truly make their mortgage payment, what is your advice to them about forbearance options? Is it something they should do? Is it something they shouldn't do if they can make their mortgage payment?
If you can make your mortgage payment, even if you've been furloughed and you're doing okay with the unemployment benefits, still make your mortgage payment, because forbearance is not a freebie. Forbearance is not forgiveness. This is something that must be repaid. And a lot of lawmakers and servicers kind of overlooked one small detail, and that's the policies that we currently have in place regarding forbearance and qualifying for a mortgage loan. So if you've opted into forbearance and then you decided, actually, maybe I would benefit more from doing a refinance. I want to take advantage of these really low interest rates right now and save some money on my monthly mortgage. Maybe you went to your mortgage lender and they ran your credit and said, oh no, it says here that your loan is in forbearance. We actually need you to bring that debt current. And now we need to wait about 12 months before you can qualify for another mortgage loan again. So this is something that when people were signing up for these forbearance programs, they didn't realize that there would be any negative impacts. And I don't think the servicers realize this, and I don't think the lawmakers realize this either. So there was a huge disconnect for those people. And something else that's really interesting, Andrew, is that I found that a lot of people who just called their servicers to just inquire about forbearance, to just find information, some of these servicers actually just put them into a forbearance program when the actual client didn't even ask to be in a forbearance program. So there's some people out there that might be in forbearance programs that don't even know that they're in one right now, and they're still making their payments on time. But unfortunately, if they went to refinance or purchase the home right now, they might find that at this time they don't qualify.
And that's interesting, because one of the things that we talked about was this article that Diana Olet came up with from CNBC. And it was really interesting because in this article, she's talking about how homeowners are getting mortgage bailouts by mistake, and it's keeping them from refinancing. Everything that you just said is here because they're like, hey, right here as key points in this article, in a rush to help consumers who have been impacted financially by the coronavirus pandemic, the government authorized a massive bailout underneath the CARES Act. But some people are simply calling their mortgage service providers to learn information and being erroneously signed up for forbearance. And that's not what they wanted. And then when they get with their loan officer, because to your point earlier in the stream, historic low interest rates down in the low threes right now is what you've been seeing trend this last week, right? Then they're finding out, oh, well, if you have your loan in forbearance, you can't refinance.
Exactly. So that's what we're seeing right now. I know entities like Fannie Mae and Freddie Mac are starting to realize this is a big problem because, you know, a lot of consumers were misinformed. A lot of consumers didn't really understand what forbearance was.
Mhm.
There was a lot of miscommunication. Servicers, oh yeah, there's no problem. Sign up for forbearance. There's going to be no negative impact to you. So now that Fannie and Freddie realizes this, I think they are discussing with FHFA, maybe a workaround or maybe new guidance on this particular topic. So it'll be really interesting to see how this develops over time.
And this was another article. You know, we do a lot of research before we come live, and these are things that we're watching so that, you know, in addition to the live stream and in addition to being professionals within our respective industries, obviously real estate in my case, and in Celeste's case, a loan officer, we also like to keep track of what's being shared out there and try to find the most accurate information about what more people are probably reading. So when you're like on Bloomberg or CNBC, these are major places that people turn for information. And these are the same ones that keep popping up in like your Google feed or wherever you get your news feed. Then these are things that you're seeing. So this one right here, I mean, I gotta give it to Joe here because Joe Light and Shaheen, hopefully I'm not mispronouncing that, the authors of this article just yesterday came out with this salacious title: Fannie and Freddie Forbearance Rule Sows Fears of Mortgage Hangover. You know, and what does that mean exactly when you hear this? Because borrowers could be denied new loans if they delay the payments. And this is why we got to talk about forbearance and get real about this, because if you can make your payment on your home, you absolutely should. Now, when we think about stimulus checks and we think about everything we're seeing through the CARES Act being provided to a lot of people, not everybody, unfortunately, but a lot of people out there that need it, that's where it should go. But to the people that don't need it, that do have the job security, that are earning good income, you need to keep track of your responsibilities, because at the end of the day, we all know something doesn't come for free. And there's always a trade-off somewhere in the mix. It's what you and I were talking about yesterday or earlier today. It's like, okay, we're going to throw this bait out there called forbearance. But what is on the other side of bait? Normally there's a hook. So what does that hook look like? And that's still after a month of, after Bill and I first have gone into this, where we're still trying to figure out exactly how is this going to work. Yet there's 4 million people, according to the previous article, that are working through a forbearance process. And that's alarming, because what happens if they come back and say, hey, we're going to essentially do this like a silent second against your house until this debt gets repaid, right? Mm-hmm. That's a problem. So what happens then if they say, hey, you know what, we're just going to tack it on to the end of your term. So if you had a 30-year fixed mortgage, now we're going to tack it on for however long it is at your normal mortgage payment, which would be a better option. But at the end of the day, it's still going to cost the consumer more money by virtue of an amortization schedule. So we got to gain clarity and insight onto how this is going to work. And this is something I feel that we're probably going to be having to talk about, you know, probably at least every 3 to 5 weeks as more information becomes available, because we need to keep pushing this out there. And the purpose of streaming about a topic like forbearance gone wild is it is going wild. There's 4 million people, you know, which roughly, I think like 7% of mortgage holders across the United States. And please correct my numbers if I'm wrong. You're the loan officer. So.
It's actually looked up the numbers today, Andrew. It's 4.66 million people in forbearance, and 8.8% of all active mortgages are in forbearance right now.
So you said 4.66. So from the time that I read that just a few days ago, 4 million, we are now 4.66 million. And then we have that as a total segment of the population of being, you said 8.86?
8.8% of all active mortgages.
So that's really interesting.
Forbearance.
So that brings up the question to me in my mind's eye. How many of them are in forbearance that didn't mean to be in forbearance? How many of these people really meant to go there, right? So what I want to do is, obviously the purpose of live streaming to me is answering consumer questions and viewer Q&A, which is the best part. It's my favorite part. Is I would like to know what everybody else is thinking about forbearance. And do you think it's a good idea? Is it not a good idea? How do you think this should work? And do you have any ideas that we should approach, you know, we being like we're always stronger and better together than we are not. So we being the people here, approaching our respective Congress folks and respective senators and say, hey, there's over 4.66 million people that are doing this. How many of those people didn't want it? And all they did was pick up a phone and call their loan service provider and say, hey, I heard about forbearance. Could you tell me how it works? The same reason that we're streaming about this. But because they made that call, they got erroneously they put onto forbearance when it was never their intent. And now if they go out and try to get a different type of loan, maybe an auto loan, maybe a credit card, maybe it's going to be the same way where just like having a forbearance on one of those two, Celeste shared with us, could impact you being able to refinance your house or get a first-time home loan if you were trying to buy your first home. That's awful. So we got to provide clarity. And the way that we gain clarity is with facts. And the way that we get facts is by coming together as people and saying, hey, let's figure this out. This is a confusing situation. Let's take the step back, hashtag JTAB, just take a breath. Let's reassess the situation. Let's come together. Let's have a conversation, a meeting of the minds like a live stream. Let's start putting things out there and start figuring out, hey, what questions should we be asking? And let's go after those hard-hitting questions, such as, great, we know what forbearance is. We know it's available underneath the CARES Act. Thank you so much. How is this going to be repaid? And how is that going to work service provider to service provider? Oh, and by the way, since you're doing the same thing with credit cards, you're doing the same thing with auto loans, you're doing the same thing with student loans, how would that impact me if I wanted to go buy a home if I'm in forbearance on a credit card? Or if I'm in forbearance on a credit card, how does it impact me refinancing my house if I own one or getting a home loan? These are the questions that we as people need to be asking. And these are the questions that we need to put forth and gain clarity on. Because my biggest concern is that the American government does not pump $2.2 trillion into the American economy for free. I don't care what they say. There's going to be a piper to be paid. And out of that number, I guess part of what is so disenfranchising to me is there's like, I keep wondering, $2.2 trillion. And the report said only $250 billion is a massive amount of money. But whenever you're talking about $250 billion with a B compared to $2.2 trillion, that's like just over 10%. So the reason I'm using that number is that's the amount of money, $250 billion, that went to the American citizen in the form of stimulus checks for those that could qualify for those stimulus checks. Where the heck did all that other money go? Who got it? I know we have the Paycheck Protection Program. We're talking about forbearance programs. Things have to be funded, right? But these are the questions we got to get real about. And these are the questions that we need to be asking our elected representatives that are supposed to be keeping in mind the constituency, which is us, and be servicing our best interest, right? Based upon things that are important to who? Us. So if that's truly the case, then let's hold them to account in answering, where did this money go? What's going on? And how does this stuff work? As opposed to just flying by night in a chaotic environment. Now, obviously, I'm a little bit charged on this topic, right?
We're a lot charged, Andrew.
A lot charged, right?
What's going on? It's wild.
It is wild. And that's why we were talking about forbearance gone wild, but the whole situation is wild. And there's too much fear mongering going out there. There's fear pushers, and there's, people like you and I and Bill and other great agents that have come on the stream and great loan officers that have been on with us too, that are trying to inspire confidence, that are trying to get the truth out, right? Unfortunately, for some reason, we got to get more salacious, or we got to make some clickbait or something going on to get the word out, because at the end of the day, we got to get truth out, and truth prevails, and truth is truth. There is no fake news and all this other crap. You either got a lie or you got a truth. I mean, last time if I went to my mother whenever I was a kid and I say, I didn't break that glass. I didn't break that window. And she says, well, who did it? I saw you throw a rock. Well, the rock broke it. Well, who threw the rock? I don't know. I had it in my hand and I just, did this. I would have got a big old butt whooping, told I was lying, put my nose in the corner, and probably had to go pick up cow poop because I lived on a farm. You know what I mean? So, let's be honest. There's no fake news there. Either the window got broken, I threw the rock, or it didn't. So that's the problem with misinformation spreading right now. And it's disgusting, and it's vile, and it's stuff that we as people have control over. And the moment that we, the people, start realizing we're stronger and better together than we are not, is the moment that we start taking our country back into the democracy it's supposed to be. And the moment that we start holding elected representatives accountable. So, this is very passionate to me, because people are getting hurt. People's livelihoods are being, hurt. people are concerned about where, in some cases, you got upwards of 30 million people right now that have made unemployment claims.
Yeah, I mean,
report just last week.
Yeah, last Friday was 20.5 million people estimated to be unemployed just in the month of April. So that's not even including May at all.
So you have people that are worrying about their next paycheck. The gentleman that I shared with you was trying to buy his first home, did everything right, worked for years to be able to get in the position. And a month before you're getting ready to close, because he was buying new construction, the deal blew apart through no fault of his own.
Yep.
So
yep, that's
let me before I just start going on a rant, sometimes that happens. Nicoletta, I saw that you made a comment. I saw Celeste tap on it, and thank you for making your comment, right? Nicoletta says, I do not know much about forbearance, but I know that banks don't just give things for free. You're absolutely right. At the end of the forbearance period, people will need to pay not just 1 month, but 3 + 1 months, all in a lump sum. If people do not have the money now, later it will be even harder to pay off, or they will enter another forbearance plan, and that will make it even harder to recover, unless terms for repayment are to repay at the end of the mortgage. So she's touched, and very astute observations, Nicoletta, by the way, the very astute observations indeed. So she's making the same comments that we're making right here. And part of that misinformation was, hey, you're going to have to do this all in one lump sum, when FHFA is saying, nope, that's not the case for federally insured loans or government-backed loans. So it's really interesting to put that in the context. And here, Nicolette is a very smart lady. So if she's in her head, that was one of those options she thought about, but then she's smart enough that says, hey, well, there could also be a loan modification, which she's absolutely right. And there's this thing called a deferral program that we just heard about yesterday now. And you were telling me, hey, Andrew, so that deferral program is actually nothing entirely new for loans.
Yeah, so we have a bunch of different options, and one of the links I sent you, Andrew, is actually to, I think it's the CFPB website. That's where, is that it? That might be it. Yeah, perfect. That is where you should go to get information. That is a great resource for information about what your options should be, because we're kind of seeing a disconnect between what lawmakers say in the CARE Act and then what your mortgage servicer is telling you when you call and you ask about what your options are. Because a lot of people are like, well, the CARE Act says this, the CARE Act says there's all these other options, but when you call your mortgage servicer, they're telling you, oh no, when forbearance period is up, you'll pay all these payments back in a lump sum plus the current month's mortgage payment. When in fact, that's not entirely true. There should be other options. Or sometimes now what I hear servicers are saying is, oh yeah, go through forbearance, everything will be fine. When you come out of forbearance, then we'll discuss your options. But we're not going to discuss them right now. We'll discuss them after the fact, which I think is horrible, because how do we know what the options are? How do we know what the qualifications are? How do we know we're making a good decision right now? How do we know, selling your home isn't a better option than putting your loan into forbearance? We just don't know. And that's what is really heartbreaking, is that, I think a lot of people are going to come out of this hurt because maybe they should have made a different decision.
And even if they don't come out hurt, they will be coming out a little different. And that's just part of life. But part of life is also gathering facts and holding people accountable that have been elected for our best interest. And, they're supposed to be serving our best interest because they were elected, right? So that's only one aspect. And I don't want to be politically charged or anything. Obviously, I don't side on one way or the other in live streams or in videos, because it's not my place to tell somebody else their politics. All I know is that it's important to vote. And it's important to hold people to account. But at the end of the day, when we're talking about forbearance and we're talking about not knowing what's going on and then people taking advantage of it, it's just like, to me, this whole thing that with coronavirus has been mishandled. It should not have gone down. We knew about COVID-19 in November, realistically. And then we had the gentleman that was out yesterday that mentioned that he was having a conversation with the Health and Human Services back in January. So when we start looking at the timetables and we start looking at the facts, the importance of hashtag JTAB, just take a breath, to reassess the facts. And we start looking at these facts and we look at these turn times and we look for how things were handled. It's completely inappropriate because you don't inspire fear, you inspire confidence. And one way that I know as a former Marine Corps leader, right, in combat, in situations and otherwise, the way that you inspire confidence is you let people know what the situation is, number one, whether it's doom and gloom or whether it's sunshine, rainbows and unicorns on their way, the riding to a leprechaun at the end of a pot of gold and everything else at the end of a rainbow, right? It doesn't matter. The point is, hey, this is the situation. This is what we got. This is what we're doing about it. And this is the expectation of what we need you to do to help us with this. This is how we're going to move it forward. Now, that's a message of hope. Even in the darkest of days, even the darkest of hours in all of our lives and as a country and as a world, you got to inspire love, joy, and hope. And the best way you do that is through transparency. And with transparency comes truth, facts, and actually being able to discern this, not the misinformation that we're hearing, but gaining clarity. People should not speak without knowing what they speak about, in my opinion. So if you're going to speak as a government, speak with one voice. If you're going to speak as an entity, speak with one voice. And if you're going to have this conversation, have contacted the loan service providers and made sure that these were things were going to fly. Otherwise, say, hey, there's an option coming called mortgage forbearance, right? Now, we don't know exactly how this is going to work, but we are in the works of trying to mitigate any damage to you and your personal residence. Now, what we're doing is we're talking to the major lending entities. We're talking to Fannie Mae. We're talking to Freddie Mac. We're talking to everybody to come up with a set guidelines. We will have these guidelines ironed out within the next 2 weeks. Now, that's a direction. That's a path. That's an expectation. What we need you to do is, if you're capable of paying your mortgage, to continue paying your mortgage, right? This is an expectation. This is an action plan. I hope this is making sense to everyone, and I hope it's helpful to people. All the same, April, thank you for being here. Good morning, everyone. Happy Friday to you all. Happy Friday to you. Claudia, good morning. Thank you, Claudia, for being here. Michael Cerna was saying, good morning. I can hear you guys. Thank you, Michael. Very much. Carmina, thank you, Carmina. Carmina got some kudos for you. Carmina says, hey, good morning. Hi, Andrew and Celeste. I just wanted to update you. We locked at 3.25% rate on a 30-year conventional loan. Thanks for your advice. Congratulations.
Ooh, fantastic. Congrats.
Sounds like somebody else needs to have a Margarita Friday over there.
Yeah.
For Joy. And Nicoletta says, hello, everyone. And Carmina, that's such great news. Congrats. Awesome. By the way, Nicoletta, thank you for your comments on one of the videos the other day. And I just want to tell you that you are doing a great job with your positive mojo. She and I were saying, I asked her how she was going because she's going through the closing process on her first home right now. And I was like, how's everything going? She's like, oh, I'm just trying to, keep the love and the positive mojo and everything and use the law of attraction and put good vibes out there, right? Because, my good friend, Sean Cannell says your vibe attracts your tribe. And it's something I absolutely adore and so true. And so she's like, I'm going to put the good vibes out there. So I attract a good tribe and I get the good vibes back. Right. So I thought, well, give yourself a little bit of credit, Nicoletta, because you do that. You just being you, and the conversations that we've had either through YouTube comments, Facebook comments, or emails, what have you, you always are putting the positive vibes out there. And even your chosen career path as a nurse in the medical profession, you went into nursing to help people, right? So you're already putting positive vibes out there, Nicoletta, and thank you for that. It's so impactful, and we really appreciate what you're doing. Nathan says, good afternoon from the East Coast. Nathan, Celeste, is more of a recent name that is starting to trigger my mental register a lot, because Nathan made several different comments on videos, and I was trying to get through and answer them. I do the best I can to try to keep track of all the comments and answer, as many as I can realistically. And I was answering some of Nathan. So I recognize your name, Nathan, and really appreciate you being here. And I really appreciate the great questions and suggestions that you're coming up with for the channel. There were some other folks that were asking some great questions in relation to HELOCs and also, how to pay a mortgage off early using them. And I sent him the live stream that Bill and I did on Monday. And the gentleman's like, hey, I think it'd be really helpful if you'd bullet point this out in a recorded type video. So one of those will be coming in the not too distant future, by the way, because there's a lot of pros and cons and there's a lot of trade-offs over that. So it really depends, and you got to crunch numbers to see if it's going to be a smart decision or not. Carmina wanted to say thanks to Nicoletta. So that's outstanding. If there's anyone else that has any questions while we're streaming live today, please let's definitely get them up. Now, Celeste, I know you give me all these wonderful outlines, and I love you for it. I really do. And I would like to see in the forbearance topic, because there's so much that we could talk about and go on probably for days and days and days about. But what is the most significant thing sticking out in your head right now that you would like to communicate about forbearance, the overall situation, anything that we have not yet touched?
Anything that we have not yet touched. We touched on a lot of great stuff, Andrew, and I want to, circle back to those people out there who they're kind of in a pickle. Maybe their salaries have been reduced, so they're still employed, but they're afraid. Mm-hmm. A lot of these are the kind of people that I'm seeing enter into the forbearance programs because they're so afraid. They're not sure what's going to happen. Things are really uncertain. So they're entering into forbearance, I think, a little bit too early because they can still afford their mortgage payments. But I believe their reasoning for entering so early is because they're like, oh, well, I'd prefer to just have this extra money in my bank account, which totally makes sense. But a lot of these people don't realize you may actually benefit more from a refinance than actually putting your loan into forbearance. So I have a lot of people coming to me now saying, hey, I want to do what's called a cash out refinance. I want to take some money out. I want to take some equity out and pay off some of my debts. So I actually have a client, he's still working, and his wife is laid off. She was working in a casino. She's now laid off. And he, back in March, he got a cold, and his employer thought, hey, you might have the coronavirus. You have to stay home from work. We're forcing you to quarantine for 14 days. And to come back to work, you need to provide us with a doctor's note that says that you don't have coronavirus. So he got really, really scared because he said, oh my gosh, like my employer is not allowing me to go to work. I know I don't have the coronavirus. I know this is just a cold. And now I'm being forced to stay home. And how am I going to make my mortgage? How am I going to pay my bills? So all these wild thoughts start running through his mind, and he puts his loan into forbearance. And then he comes to me and says, hey, I want to refinance. I need to do a cash out. I want to pay off this debt. It'll save me about $1,300 per month. That'll make up for the money that we're missing from my wife actually being laid off. Luckily, we were able to catch it in time. Luckily, we were able to get him out of forbearance right in time. It took him a long time to get out of forbearance. He had to call the servicer about 5 different times and talk to 5 different people to finally get the thing out of forbearance. And luckily, we had ran the credit report before his loan was in forbearance. So we just skated by on that one. And there's a lot of people in that situation. So I would say, even if you're scared, even if you don't know what's going on or you feel uncertain about your situation, but you can still make your mortgage payment, call your mortgage loan officer, talk about your options for refinancing, and just verify that, just verify if there's a better option out there for you before you just make a rash decision and put your loan into forbearance.
Those are really excellent points. And there's things that you said that I thought were very powerful. And number one, thank you so much for sharing the situation, because I think that's one of the beautiful things about live streaming is that we're able to share what we're observing in practice. And when you share that gentleman's situation about the impact of a forbearance and what he was trying to do with the cash out refi, there's a lot of people where there's probably at least 10,000 more working through a similar situation, if not more, right? So that's where the power is when we can share this kind of information live about what we're seeing in the field, in the ground, in our respective industries, mortgage and real estate. This is where the power for the viewer comes in my opinion, so that they can make a well-informed decision that is right for them based upon facts and knowing where to go. And speaking of there we go. So country boy isms, right? Country boys wearing, right? So speaking of where to go, I will make sure that I put the links that we've been discussing today, and most critically, the CFPB, which is the Consumer Financial Protection Bureau's link to forbearance, along with a lot of helpful other links off of the CFPB itself in the description after the stream, so that we can make sure that we keep you educated and you know who to turn to and who to go to in your respective marketplace to get these questions answered. Right now, that was a couple of the more powerful things that you mentioned. But here's the other point, and this one is going to be coming because I'm working on this one as well with another guest for foreclosures. Right now, people think that because of forbearance and COVID-19 and the amount of people that are unemployed and the amount of home loans and such that are presently in forbearance, as you mentioned earlier, presently 8.8% of the total loans out there are in forbearance, right? So people then say, oh, that means a foreclosure is coming. That means there's going to be a decimation of lending in real estate like on 2008 levels, when it's just not the case. It's just not the case. Because even in today's stream, as we talk about homeowners that are in less than favorable situations right now, maybe they are employed and maybe they really do need every ounce of the stimulus they can get and every option they can get for forbearance and stuff. What did we just say? There was a forbearance option. Now, number two, what else did we cover? We covered there's also a deferral option. That is nothing realistically, it's nothing new specifically to like FHA and VA, but it's a remembrance of what that is. So if somebody moved from forbearance, it sounds like they would probably then be able to move into a deferral or a loan modification plan. Both situations, correct me if I'm mistaken, right? You get to keep your house.
Yeah, so that's the part where I wish there was more information out there, because what if, your forbearance period comes up, you're still not employed, you're still going through a tough time, and then I believe they can extend the forbearance period, but now you're getting deeper into the hole. Mm-hmm. And at some point you have to figure out, can I pay this back? Is there going to be a job out there for me? Maybe this is the time where you start looking for a new job if your previous employer hasn't hired you back yet. These are very tough decisions, very real decisions that a lot of Americans are going to have to make. So that's why I wish there was more information out there. So I think a lot of people are just waiting to see what happens. There's no guidance. And like I said, what are the qualifications for a loan modification? Do you have to be employed? Are they going to look at your debt to income ratio? How do these things work? And we don't know.
So that's a great point. We will know, and we will keep track of it, and we will get to the bottom of exactly how that's working and share those updates.
Yep.
Now, going back to a game plan, right? Let's say somebody lost their job, okay? Because I just wrote down a very quick little flow chart here, right? Because this is what's been going through my head of how this works based upon everything that I read, based upon streaming with you, Bill, other people, and the conversations I have and what I'm seeing on YouTube and everything else, right? And when I say seeing on YouTube, I'm not talking about watching fearmongers. I'm talking about listening to what our community has to say, because people in our community on a channel, 19,400 and growing, thank you, by the way, you guys, each and every one of you mean everything to me. And I am always hustling and pushing and educating myself to do better for you. So whenever I think, I'm reading through the comments, every comment that comes in, I'm reading. Everything that's happening, I'm taking a look. And every way that I can to figure out how to help, I'm going to do it. But back to that flow chart, right? Let's say that somebody went unemployed, went furloughed, and is collecting unemployment stimulus check right now, right? And they own a house. Well, let's say then they don't know because they got a letter like the gentleman that I mentioned earlier that unfortunately the situation collapsed, right? But let's say they owned a home, so they still have that 30-year mortgage or however long that term is left. Well, then they would hit up for forbearance, right? Now, let's say they still don't have a job in 6 months and forbearance was only good for 3 months. So what happens in 3 months? Well, that's where we would start looking on the type of loan they have and for the deferral. Now, underneath the deferral, to your point, right, you have, okay, what are the DTI ratios? And DTI right now, for reference, is debt to income ratios. It's just an acronym, debt to income ratio, DTI. So what happens if you don't have that ability and you don't have the ability, your employer doesn't have the ability to say, hey, Celeste, we're going to bring you back in 3 months. So you don't even have like a game plan there to be able to provide a loan officer. In that case, you have two different options, right? One, let's say that you did have it. We move on to the next flow. But if we go back to, let's say that you don't have it, what happens next is a worst case situation. Well, in that situation, then it's highly likely, and I hope it doesn't happen, but it's highly likely that you could lose your house because you can't pay. And there isn't going to be a loan modification maybe available, because that's the third step off the deferral, is then to approach loan modification, right? And see if you can get a loan modification. But ultimately, every loan officer wants to evaluate your ability to repay. And if you don't have the ability to repay, then that's where you could potentially risk losing the house. So then you say, oh, okay, so does that mean the house is going to be short sold, foreclosed? Nope, not at all. Not necessarily whatsoever. And here's why. A lot of Americans that bought homes in excess of 12 months ago have this thing called equity in their property. And even when you look at the current real estate market, let me give you another for instance, because this all happened since Monday, by the way. I put another listing on the market, boom, 24 hours, had an offer, right? I've done that with $600,000 homes, and in the case of this other property, $265,000 home. So I'm seeing this across the board where the buyer demand is there for the buyers that aren't impacted as much by COVID and with their job security situation. The buyers are there. The inventory is very tight on the other hand. And even if we see home depreciation, even from forecasters through Lawrence Yun, which is the National Association of Realtors chief economist, and you go into like Realtor.com's economist, Redfin's economist, Zillow's economist, and you start nerding out on all these numbers, they all think that worst case situation, you're looking at maybe a 5% depreciation of home value. Well, that's nothing, because last year, a lot of people gained 10+%. And the year before that was even more crazy, right? So when you start looking at that, how much does it cost to sell a home on average? If someone said, hey, Andrew, I don't know if I want to sell my home or not. Could you give me a rough estimate of what it would be to sell my house? Easiest way to do that is by giving you a percentage basis. And I say, yeah, it just depends on the terms of the contract, but from low to high, I would say somewhere between maybe 6.5 to 9% would be pretty typical across these United States. And how do you get to a 9.5%? Well, we assumed that there were some seller concessions in the form of buyer closing costs. That's how we got there. But at the same time, if you just say 10% or less, somewhere between 6.5 and 10%, or 6.5 to 9%, whatever the math is easiest for you to do it. And that's how much it would cost. Now, let's say you have a 13% equity position in your home right now today, and you don't have that ability to get a deferral or to get a loan modification. Does that mean you have to short sell or foreclose? No, you could sell and take the extra money and rebuild your life again. It may not be the most admirable outcome, but it is a favorable outcome to the alternative. So when we're talking about the flow chart, it looks like forbearance, deferral, loan modification, sell versus foreclosure or short sell, right? Mm-hmm. There are so many options to go through. And that's why when I hear these fear mongers say, oh, the foreclosures are coming, so were the redcoats back in the day too. And we know how that turned out. Here we are, the United States. But hey, you know what? At the end of the day, it's just not the case, because there are so many different opportunities and vehicles to assist you at this time. And a lot of Americans have equity in their home, more so than in most cases in previous times. So when we talk about that, we got to gain insight. It goes back to that clarity, it goes back to that J tab, right? Just take a breath to reassess the facts. If we look at each of our respective position, how much is my home worth right now if you're a homeowner, right? That's a good question to know. How much do I owe? What is my equity position? What are the options available to me? And why, as people that have all gone through some form of school, whether you dropped out of high school, you got a college degree, whether you have a doctoral degree, it matters not. We as people are smart, right? No one's going to say we're stupid, but we're smart. So why not take a pen, right? A pen to paper, write down questions we want to propose to or present to our Congress folks about gaining clarity. Clarity is king, right? And conversation is queen, right? So that's saying clarity is king. So let us gain some clarity, and then let us talk to the queen to have the conversation about what we're talking about. And let us write down those questions. In the case of forbearance, okay, what is forbearance? Okay, we know what forbearance is because we've defined it today, and we know that it's a temporary postponement of a debt owed. In this case, we're talking about mortgages, right? So how's it going to be repaid? That we don't know exactly yet, but we do know that it sounds like that it's going to either be tacked onto the backside or it's going to be spread out over a period of time for repayment. And we do know that what we don't know will be known, and we will help you know it when we know it from the guidance that is being pushed down, right? So then the next question, what happens if forbearance isn't an option and I'm still not back to work? Deferral, loan modification. Those are your next two, right? What happens then? It just depends, are you back to work or not? What happens if you're not back to work? Can you get a loan modification? Okay, if not that, am I in a position to sell, short sell, or foreclose? Well, to know the options of that, obviously the best one in that one would be selling the property. If that was your three options, then you need to know equity position in your property. And how do you find out your equity position in your property? You don't go to Zillow. You call your trusted real estate advisor. You get an honest assessment of the comparative market analysis along with what makes the market tick, another acronym, TIC, T-I-C, trends, indicators, and conditions in your local marketplace. You form a game plan and you form a timeline saying, if I don't have my employment back in the next 3 to 6 months, this is the situation I'd be. The real estate agent I met with said that average days on market are 90 days in my marketplace. That means it could take me 3 months to sell. Therefore, if I don't have any hope on the horizon from an employment perspective, in about 3.5, 4 months, it's time for me to get out of Dodge and cash out my equity if you have equity in your property. Okay. So these are the ways that we think through things. And this is like essentially how to adult. This is like how to real estate, how to mortgage. But this is how to make sense of life. Even though my channel is about how to make sense of real estate, I find a deeper passion in trying to help people make sense of life, to think this stuff through, because we are stronger and better together than we are not. And I really,
Hey, Andrew,
yeah,
I have some good stats for you.
please.
There's 124 million households.
Mhm.
Of those, 43.4% are rented. And then there's 80.6 million owned. Of the properties that are owned, so of the 80.6 million that are owned, 34% of those are owned free and clear.
Mm-hmm.
And then of the 53 million households with a mortgage, the average LTV, loan to value, is 53%. That means there's a lot of people sitting on equity right now. So if we look back to like what happened during the great financial crisis, we saw a lot of people with no equity. And I think that's why we saw a lot of foreclosures. I don't think we're going to see a ton of foreclosures coming out of this because a lot of people have equity.
Thank you. You just added 110%, and high fives to you because you just added 110% with the numbers that you were just reading of why I keep sharing that we have equity. Most of us have equity. All these different reports that I've read, most of us have equity. At a 53% loan to value ratio, that is a huge chunk of equity that you have in your home.
Average equity is around $177,000.
What could you do with $177,000? You know, like that Capital One credit card, right? What's in your wallet? Well, $177,000 will change your life pretty quick. That's a substantial amount of money.
Even if that means you have to sell, rent for a little bit, sustain yourself for a while, and then, get back into the market and purchase.
Absolutely. So at the end of the day, this is all about coming together, as I keep saying, stronger and better together, bringing love, joy, and hope. And I hope that despite some of our technical challenges earlier on in the stream, that you were still bearing with us at this point. It's okay. We learn and we grow together. It's nothing wrong. On any given live stream day, anything can happen. So it's just about moving forward, and we did so. So great job, Celeste, for that, by the way. The point that I was going with is it's about inspiring hope and positivity. And when we get the word out and when we share this kind of content on our social media and when we're out there having conversations with people, it's about approaching people with facts, and it's about approaching people with reason, and it's about approaching people with compassion and empathy, because we need to help each other, and not only in down times, but also in up times. So when we're talking about that, each one of us can be that change we want to see. Each one of us can be that opportunity with nothing more than a smile to make the world a better place, because smiles are contagious, right? So if we want to see positivity, why not be that positive light within our own life that we wish to see? And that's where the beauty of Stronger and Better come together, because we can do it together. Now, on that note, we've been streaming for almost an hour. So Miss Celeste, do you have any parting shots for us you would like to share?
I just want to say thanks so much for having me again, Andrew. I love coming on here, sharing as much information as I can. So thank you all, for everyone who's tuning in. If you have any questions, reach out to me. There's my contact information. My email's on there, my personal cell phone number. You can text or call me on there. Or I will be checking, the live stream later. So if you're tuning in late, you can leave a comment and I'll definitely write you back.
Fantastic. Thank you so much. Carmina says, smile and positive energy. That is the perfect thought, Carmina, as we get ready to adjourn. And I'll look forward to seeing everyone back Monday at 9 a.m. when Bill and I will have another interesting topic to chat about. So in the meantime, everyone, enjoy a beautiful weekend, and please be the reason someone smiles today. And please be the reason that somebody has a better day. Thank you so much. And we'll talk to you guys again soon. And we'll see you Monday.